Hey folks, the week that was ending September 19, I think it is. Okay, Kate ratio has hit 40 today. That's something to celebrate, I suppose. Um, the price to sales ratio is the highest it's ever been. Market cap to GDP is the highest it's ever been. Everything's the highest it's ever been, and it is a time to be extremely prudent. If you have a look at the excuse me, what do you call those things? A blog. If you have a look at the blog, it's a short one, and the message is be careful. And in all seriousness, it's looking. I don't know how long it goes on for, but I'm getting more and more concerned about what 2026 holds. The Mag 7, Mag 6, Mag 5, whatever you want to call them, they're all crazy as well. Some of that will probably be justified, but a lot of it won't be. It is just absolute sort of casino material out there at the moment. And even the old fellow Ross Gittins, like me, is saying we've seen it before and it doesn't end well. That's really the whole message. There's another few things as well. The the American economy is still doing sort of okay. However, the cut in interest rates doesn't really stimulate the economy. What it really does is it reduces the amount of money being spent in the bond market in terms of the interest payments going. So think about old people like me who go, "Oh, give me my interest on my bonds," and then they say, "No, we're actually going to give you less money." So that ends up feeding through to the economy. The other thing is Donald Trump seems to be in full swing in terms of revenge and payback, and that looks to be very, very serious. I wouldn't be surprised if we start to see some really sort of regional civil wars or stuff break out. I think America is really on a knife edge at the moment. The impact that has on markets, I'm not sure, but I can tell you in the long run that's not going to be good when you've got an overvalued market after a 16-year absolute crazy bull market. Add into that, global economies are in trouble. France is having a moment. China's having difficulty keeping its economy afloat. Don't be deceived by just listening to a lot of people who say, they're going to take over the world from America. I think it's just going to be a mess for a while. The UK is also in a spot. They, talk about needing an IMF bailout. Generally, things are looking fairly troublesome. One bright point, if you could call it that, is that the war economies are in full swing. Lots of countries now are spending a lot more on defence, including Australia. So that's going to be one that we have to watch. The employment figures came out during the week, and it was a bit sort of, but not a nothing burger, but not an anything burger either. But overall, it's generally not that good. We'll talk a bit more about that on the podcast. But again, Australia's just sort of bouncing along, going nowhere in a hurry, really. The other one there is Australia's property market's another story, but even there's conflicting reports that demand may be tapering off. There's a really large expectation that the 5% deposit will boost the property prices, and it may do. But the problem is when you've got a bull market, you think everything has a sort of cause and effect, a cause correlation thing. Markets may rise anyway without the 5% deposit. I'm more interested in thinking about what happens on the other side, and Canada and New Zealand may also be indicators there that you see some of those places have got large losses, and America is also experiencing a sort of a bifurcated market. Some is doing okay, but some are starting to fall, and there's some red flags going on there. Again, rare earth article there just to keep you posted on that. I still think there's lots of potential there. Please don't forget to rebalance, because the ones we talked about have done pretty well, to say the least. Okay, lesson of the week. Again, just showing you this. The reason why I'm showing you this is because this general idea of stock markets only go up generally is not right. It depends on valuation. Again, just showing you there that there are long periods where the stock market goes nowhere. That may be what we've got coming up in the US market. Now, the reason why is again, go back to the start, the Cape ratio today has hit 40. I wouldn't be hoping to make a lot of money in the US over the next decade. Anyway, we'll leave it there, folks, and we'll see you next week. Cheers, folks.